We have all heard it over and over again from economists, investment experts, analysts, and observers. Over the last few months, there have been loud ringing alarms, all screaming one thing. The owners of Airbnb properties are on the verge of selling, and it'll lead to an all-out housing market crash like we've never seen before. As we've discussed in a previous video, the rise of these short-term rental properties skyrocketed as investors took advantage of low interest rate loans. Now, while 2023 came bearing a lot of economic uncertainty, no one seems to be able to say when exactly this bomb will finally go off. Just a quick backstory. Airbnb was launched in 2008, when its founders, Brian Chesky and Joe Gaba, had an idea to place an air mattress in their living room and rented it out as a bed and breakfast. Fast forward shortly thereafter. They brought in their third founder, Nathan Bosharzik, who ran the IT side of things. They eventually developed their website, which launched in November 2008. The rest is history. Their reported income in 2022 was over $8 billion, with net income reported to be $1.9 billion. I like to describe it as the Uber of short-term rentals. Investors buy properties and list them on Airbnb for people to rent as an alternative to hotels. Lots of investment experts are speaking about the dangers looming around the corner, and it will be wise for us to listen and take precautions. Revenues per listing are dropping. And, according to recent data from All the Rooms, comparing Airbnb revenues per listing on May 2022 and May 2023, revenues per listing have dropped nearly 50% in cities like Phoenix, Arizona, and Austin, Texas. Most people argue that there is no drop in revenue per listing, with economist Jamie Lane at the forefront. The senior vice president at AirDNA argues that the data from All the Rooms is inaccurate. And although revenue per listing is down for Airbnb in 2023, the drop is not up to 50%. Instead, it is only by 3%. Well, we can all agree that the exact revenue depends on the city, but there is no doubt that there has been a drop in listing revenues, whether by 40% or 3%. Contrary to Jamie Lane, Nick Gurley, the CEO of ReVenture Consulting Company, believes the Airbnb collapse threat is real. According to him, in a tweet, he adds that considering the 50% low revenue data in cities like Phoenix and Austin, the collapse may force home buyers to sell their properties. His assumption is that this force will trigger a housing bust that can be compared to that of 2008. Austin and Phoenix are not the only cities to experience low percentage listing revenues. According to data from All the Rooms, other cities have also seen significant drops this year. A 3-month average per listing for May 2023 compared to May 2022 shows that revenues have dropped by 47.6% in Sevierville, Tennessee. In San Antonio, Texas, there is also a 43.8% decline. Then, over in Nashville, Tennessee, there is a 39% drop. And Seattle, Washington has a 32% decline. But before we continue, please take 3 seconds to click on the like and subscribe buttons. Hit the icon to be notified when we post a new video. It helps us a lot. This issue is becoming scary for the U.S. housing market because there is no way to say exactly which way the market will fall in the next few months. The situation becomes even more unclear when we compare the number of Airbnbs out there with the number of homes listed for sale. This uncertainty mainly stems from the fact that there are more short-term rental properties hoping to make a profit than homes intended as primary residences. According to data from All the Rooms, there are around 1 million Airbnb rentals and 570 homes for sale. And this creates a huge home price downside if the Airbnb owners decide to sell. Nick Gurley also commented on this situation and once again wrote that the number of short-term rentals, estimated at 18,000, is more than double the number of sale listings, estimated at 8,000. When you add in the Airbnb revenue, which is down 50%, what you get is a high forced selling cocktail. With all the areas currently bleeding revenues up to 50%, it is highly likely that we may just start seeing Airbnb owners being forced to sell at a loss. The cities with a higher risk of forced sales include Eastern Tennessee, Central Texas, the Pacific Northwest, and the mountain regions. Furthermore, Airbnb buyers who bought over the last 2 years at a higher monthly payment are in for a hard time and could be the first to sell. The high interest rate and low listing prices make for the perfect ruin for any real estate business, with very little margin for error. On the other hand, more seasoned Airbnb owners may escape this bubble as they may be reluctant to sell despite the loss in profit. It is no surprise, especially if they have purchased their property at a lower mortgage rate and can withstand the low listing problem. The real estate business is meant to be a long-term investment plan that should appreciate with time. But the Airbnb market's short-term return make it difficult to withstand the market value loss. This situation becomes worse when there is a DSCR loan in the equation. DSCR loans are contingent on speculative future profits. So, if you are not making any profit due to low listings, it becomes harder to pay the loan. And with the pandemic over, fewer people now work from home or vacation in other cities. So, it is expected that demand will go down more, just as supply will go up. In simple economics 101, what you get is a crash when supply becomes greater than demand. Experts say that ultimately, if there is an Airbnb crash, it will help to rebalance the real estate market and offer fresh opportunities to the next batch of home buyers and investors. As Airbnb sales increase, the number of homes for sale will decrease, pushing down home prices and rents. Remember that most people believe that we are already in a bubble, and what better way to stop the bubble from bursting than by letting out a little air? The rush to sell in the Airbnb market will act as an air leak in the bubble we assume we are in. Even Nick Gurley and Jamie Lane agree that Airbnb revenues per listing will likely continue to decline in 2023. If we follow their forecast, we should expect more decline in the coming months. This huge drop in earnings is a signal following the crisis that we should be expecting. It means that some hosts are struggling. They are bulking under the weight of poor listings and high mortgage rates. The current average 30-year mortgage rate is 6.67%, so high that we have never seen such a rate since the Great Recession. The whole uproar about Airbnb owners on the verge of selling is a result of these mitigating circumstances. Just like in every other market in the world, a little spark of panic can cause a wildfire. Even if we lean towards the argument that there is more demand and enthusiasm for travel among domestic and foreign tourists, the demand is not really a cause to celebrate, because according to HSBC, the economy may go into recession soon. And if we experience another recession, the effect could be catastrophic. We are likely seeing a mad dash to dump properties in the near future. However, remember that these are all just speculations. Another reason for the outcry about the Airbnb crash is the number of rental properties currently on the market. The ratio of rentals to home properties is almost 60-40, and if the mad sales rush were to begin, it would receive the hardest hit, especially as there may be no sustainable supply ratio to discourage owners from selling. So, what can you do to escape the scampering that seems to be looming over if a sell fire grips the short-term rental market? The first thing to do is to conduct thorough market research. Compare the demand-supply occupancy rate and check the average nightly rate in your target area. If you are interested in buying property, you can use the analytical tools like AIR, DNA, and all the rooms to determine if the market will favor you in the long run. You also have to prepare for market fluctuations and have a safety plan for drops in revenue due to government policies, seasons, or competition. There should always be a contingency or backup plan for any emergencies the market will throw at you. At this rate, it is better to be pessimistic and make plans for the worst than it is to be optimistic and unprepared. If you choose to sell and leave the market, you may be lucky to sell at profit if your property has a good record and positive reviews, but expect some challenges, such as booking transfers and finding a buyer willing to take multiple risks facing the short-term rental business. There is no doubt that Airbnb is a great investment. However, it's not for the faint of heart. If you like this video and find the information useful, please show your appreciation by clicking on the like button and subscribing. Leave us a comment with your take on the Airbnb business. And if you are an investor in the business, tell us some challenges you are currently facing. Thank you for watching, and I'll see you in the next video.